Hi, welcome everyone. Today we're gonna cover a new episode of the market sentiment. We're gonna do it in the English language. I'm gonna do my best to speak well. Where we're gonna discuss today the most important things of the cryptocurrency market. The meaning of this episode of the market sentiment is is important to bring the best analysts on this episodes to full cover the cryptocurrency market. And therefore, I brought today Anthony from Economy in the call. He will introduce himself briefly. What we're gonna do, we're gonna dig deeper in the following topics: the cycle of Bitcoin. We're gonna see what the correlation is with Bitcoin and the US liquidity. He has some nice insights, and he gonna show his current market analysis, where he looks to and what we can expect in the coming months. Before we start, don't forget to hit the like button and to follow us to get more alerts from next episodes. Hi, Anthony. How are you today?
Hey, Tim. Firstly, thanks for having me on your show. Hopefully, I can provide some value to yourself and your subscribers.
Yeah.
Looking forward to getting into the weeds and going through some charts today.
Okay, nice. First of all, can you introduce yourself briefly? What's your experience in the crypto markets? How you get, how do you say it, get introduced in crypto and that kind of stuff?
Yeah, sure. So now at the moment, I'm the head of business development at Economy. I'll touch on Economy and what it is we do here in the cryptocurrency market in a second.
Okay.
I guess I've been working in the financial markets now going on 8 years. Started initially in fund management, very traditional investing, moved across into trading FX and futures and cryptocurrency. And then over the past 4 to 5 years, I've been working directly within the Bitcoin mining industry, as well as trading cryptocurrency as well. So yeah, it's given me a lot of insights into Bitcoin cycle, the supply and demand, understanding investor sentiment, and hopefully I can share that today with your audience.
Yeah, it would be very nice. Okay, and where stands Economy for, actually?
Yeah, so Economy, we are essentially a platform where we introduce professional cryptocurrency investors to, I guess, beginner investors. So people who need some assistance, they can essentially attach a strategy on their account, which a professional investor is currently using. So if you haven't got time to analyze the charts and make investment decisions in the cryptocurrency market, you can remain in control of your funds and in your crypto and in control of your cryptocurrency, but you can attach a strategy from a professional strategy manager. So when they rebalance their portfolio, that essentially gets rebalanced onto yours as well. And they will receive a performance fee for looking after your portfolio.
Okay.
Yeah, it's like an exchange, but we essentially sit on top of exchanges, and it's more a portfolio construction and management cryptocurrency exchange.
Yeah, and Economy provides enough liquidity to work with different exchanges together.
Yeah, correct. So we sit on top of more than 10 different global exchanges. We provide our own liquidity. So yeah, there's no liquidity issues there. When you come on board and invest with Economy, we're essentially working with strategists who have millions of euros following their strategy. So for them to rebalance their strategy, we can't just go and do that on one exchange straight away. So you have to break that down into small orders and filter that through to a number of different exchanges, so it doesn't move the market in a large way.
Yeah, indeed. Cross liquidity, actually, then.
Exactly right. Yeah, exactly right.
Okay. The first topic where we're gonna speak of is the cycle of Bitcoin. I'm also very interested in the cycle of Bitcoin. I know a lot of it, but I saw your analysis and it was very nice to see how our visions goes in the same direction. If you have to define the cycle of Bitcoin, how would you express it according to your insights?
Sure. So we need to remember that Bitcoin is still only 13, 14 years old. So it's still a very new financial instrument. So basically, we still, when we make decisions, investment decisions, we have to use past bull and bear market data, average that out, to help us make investment decisions going forward. So it's an educated decision. It's not an emotional decision where we're going in and buying Bitcoin based on the news telling us that Bitcoin is going to go to $1 million. You know, that's not what it's more about understanding the cycle, understanding the halving events, how that impacts the cycle, understanding supply and demand. Also taking a look at the US dollar index. Is it a risk on or a risk off environment? And making decisions based on what's happening to the DXY or the US dollar, as well as what's happening to the Bitcoin cycles as well. And I have a few charts to share on Bitcoin's price cycles, the US dollar index plotted against Bitcoin as well. And we'll also go through, I guess, central bank liquidity, how that's impacting the market, and why that impacts the Bitcoin market especially as well. Because although Bitcoin and cryptocurrencies are thought of as decentralized, they are still a risk-on asset. So they need a positive market sentiment to perform well. Although recently Bitcoin has performed well due to a number of banking crises and banking collapses in America. Which is why Bitcoin is really here. It's to help protect investors. It's kind of insurance from the fiat system.
Okay.
So, you know, yeah, the banking issues, that although that's a negative market event, it is positive for the price of Bitcoin in the short term.
Okay. You mentioned a lot of factors or things that happened in the past for the Bitcoin cycle. Do you also cover the adoption, the mass adoption from Bitcoin to make your analyze on the Bitcoin cycle? Because for the volatility of Bitcoin, it would be less and less and less in the future. How do you look to the adoption to get there more like insightful analyze?
See, I understand where you're coming from. I believe the number of wallets holding at least one Bitcoin has just ticked into record high territory. So adoption is happening. However, what I will say is it appears as though adoption is happening in countries where inflation is out of control and they're having severe currency devaluation. So the West, although there is severe inflation in the West and in the US, countries like Venezuela, countries like Brazil, Argentina, South America, those kind of areas in the world, they appear to be adopting cryptocurrency or Bitcoin. You know, a couple of countries have adopted it as legal tender initially, and that should essentially make its way across the globe due to currency devaluation, which is happening because of the central banks printing endless amounts of money, which is devaluing your currency, which is essentially positive for Bitcoin
adoption.
Correct.
Yeah, indeed. We're gonna look to your chart. I will add it on the stream. Yes.
So this is essentially touching on what we've just spoke about. So, you know, we can see a steady incline of all US dollars in circulation. We then get to the COVID-19 pandemic, early 2020, and within a 22-month period, 80% of all US dollars in existence were printed in that time frame. So it went from roughly 4 trillion in January 2020 to over 20 trillion in October 2021. So within that short time frame, there was a surge in liquidity in the market. And that's essentially why there is so much persistent inflation at the moment. People are complaining about supply chain issues, which obviously was a factor during COVID. But if you're really looking at what's driving that inflation, it's because of so much liquidity by central banks around the world was put into the market. So the cost of goods and services obviously went up as liquidity was pumped into the financial markets. You also need to understand that that liquidity needs to go somewhere indirectly. So the following chart on this presentation demonstrates how that liquidity went into assets like gold, Bitcoin, the S&P 500 as well. So if you want to go to the next chart. Oh, sorry. This first chart, Tim, is the dollar index. Okay. So basically, we can see during Trump's time in office, the US dollar index was increasing in value due to the US-China trade war. We then had a COVID-19 market crash. The US dollar index spiked into that 102, 103 area. And if we just go back to the money supply, as soon as the central banks around the world started printing money, there was a major devaluation of the US dollar index. Okay. So the US dollar index declined very aggressively from 103 down to 90 to 89. Now, because of that devaluation, risk assets like gold, Bitcoin, the Nasdaq, the S&P 500 recovered extremely quickly and began pumping to record highs. And you can see Bitcoin was one of the major beneficiaries.
The green one, yeah.
Of the central bank liquidity that was happening during COVID-19.
Okay. You think that liquidity is the most important thing also when the halvings plays out? The next halving in April 24?
Understanding whether we're in a quantitative easing cycle, quantitative tightening cycle, understanding where central banks are in that cycle. At the moment, we're estimated to be getting towards the top
more
of that
easing.
cycle.
Yeah.
So whether we have one more rate hike from the Fed, then a pause, the money markets are now expecting rate declines towards the end of 2023 and early 2024, which is essentially why we're now seeing tech, big tech is rising very aggressively. That's why cryptocurrency is doing very well, because big tech likes an environment of low interest rates. Okay. So yeah, the market is kind of getting ahead of itself at the moment. So it really depends on what the Fed does. But the Fed is really trying to jawbone the market at the moment. So they're saying that they're going to have to keep raising rates. They're saying they're not going to reduce rates yet because they're trying to talk the market back down again. But the market doesn't really believe them just yet.
Okay. Nice. Interesting.
And this is obviously touching on the Bitcoin cycle. Roughly 8 months ago, I believe it was September time in 2022, I posted a chart on my LinkedIn detailing that we could be looking for another leg lower down into that 14K area, 10 to 14K area. However, what we're really looking for is signs that the market is going to start moving away from the US dollar. The US dollar is really rising aggressively because the Fed was raising interest rates very quickly. So the market was rotating out of risk assets like Bitcoin and into the US dollar index, which is the global reserve currency. During a risk-off environment or during a bear market, everyone wants to hold the US dollar. So if the Federal Reserve is reducing the supply and there's an increased demand for the US dollar, then the US dollar index is obviously going to rise very rapidly. Okay. So essentially what I was painting the picture here was, yes, we're in a bear market, and yes, the US dollar index is rising very aggressively, but we need to be aware that there's going to be a shift away from that stance soon in 2023, because the Federal Reserve will need to pivot and cut interest rates as we move into a recession like they always do.
Okay, nice. I can show you also a 3-month chart of the dollar within a few minutes. Right. It would be interesting to see what happened there.
This chart of the dollar is really indicating how every Bitcoin market top coincides with a dollar index bottom.
Yeah, indeed.
How a dollar index top coincides with a Bitcoin market bottom. Okay, there's not going to be an exact perfect correlation, but really, when you're looking to accumulate Bitcoin, you should also be plotting the DXY to understand whether the DXY is going to increase in value or decrease in value. And also understand the macroeconomic landscape in the US and whether the Federal Reserve is going into a quantitative tightening cycle or a quantitative easing cycle.
Very nice to see. Yeah.
Right.
Because you use the correlation of the DXY and the Bitcoin often, actually.
Yeah, exactly right. And I'll just go back a slide. This kind of rising parallel channel, I'll just touch on this. Basically, the red horizontal lines, this is a halving event, previous halving events in the Bitcoin cycle. Okay.
Yeah.
Now, a lot of investors that are aware of the halving event will wait until the Bitcoin halving event before they start buying cryptocurrency, because they think the halving event is the green light for the next bull market. However, based on the previous bear market cycles, Bitcoin has actually bottomed roughly 400 days prior to a halving event. Now, the next halving event is estimated to be in April-May 2024. So if we subtract 400 days from that, I guess it would be Q1 2023 would have been the Bitcoin market bottom. Basically that supposedly, based on this analysis, the Bitcoin market bottom should have taken place already early 2023, and we should now be entering a new bull market phase. And I'll show you that on the next slide here. We can see that the Bitcoin market, Bitcoin has broken out of that negative trend line resistance. It's broken out above the RSI on the weekly time frame. What we can also identify is every Bitcoin bear market is slightly getting less aggressive. So we had a 93% decline, we had an 86% decline, an 83% decline, now a 79% decline. So we're starting to get slightly less volatility on the downside during a bear market, slightly more shallow. As the volatility kind of eases out, we can see that this rising channel is now aiming north of 100K during the next bull market.
Do you only look to the RSI on high time frames or also lower time frames?
So it depends on the strategy I'm looking to trade. So if I'm trading daily on a shorter term time frame, then I'll be using maybe some moving averages. I do a lot of Elliott wave theory from my trading.
Nice. We have another guest speaker of the market sentiment, Gert van Lagen. He used the same thing, the 5-wave correction and that kind of stuff.
5-wave bullish move, 3-wave correction.
Yeah, indeed. Yeah, he used it also, and it's very how do I say it? Very interesting to see how it plays out every time.
It's very subjective though, so
true.
It takes a lot of practice. And what I identify as a 5-wave, someone else may say is 3 waves, but it takes a lot of time, and you get things wrong. But with your Elliott wave risk to reward ratios, you don't need to be right every time. You have a really good risk to reward ratio on your trades. But it depends. The strategy I use depends on whether I'm trading daily or looking to accumulate long term. So this chart here I use for long term accumulation. I now believe Bitcoin is entering that new bull market as we go into the halving event. So I'm now accumulating Bitcoin. I'm also accumulating some of the altcoins as well. But Bitcoin and the DXY are really my leading indicators for the health of the overall cryptocurrency market as well. So we need to see a continuation to the downside on the US dollar. And we also need to see a continuation to the upside on Bitcoin for the rest of the cryptocurrency market to thrive into the next bull market.
Okay. Interesting stuff.
Yeah, a lot to kind of digest there. And again, this is an updated version of the DXY versus Bitcoin. So we've seen that Bitcoin market bottom around 15,500 and a real rotation out of the DXY into risk assets. You take a look at the NASDAQ now, tech stocks, cryptocurrency, Bitcoin's up nearly 100% year to date. So those kind of high growth tech stocks or tech environment is thriving at the moment due to investors anticipating a Fed pivot now towards the end of 2023. And the reason they're expecting a pivot is because every time the Fed raises rates this aggressively, it tends to lead us into a recession, which generally is followed by an interest rate cutting environment.
Okay. And do you have a specific level for the DXY to break downwards?
We take a look here. So the DXY is now testing the double top
lows.
Yeah. So this is obviously a major support level. Previous resistance, now support. So for some, I guess, validity or to confirm a breakdown of the dollar index, we obviously need to see a move beneath that 100 level, 102 to 100.
Yeah.
Confirmed move. Yeah, because that would then be a break back down into that support area.
Yeah. I have also an additional chart. I can show it if you want.
Yeah, go for it.
Second. I'm gonna look here. You see? Do you see my chart now?
Yeah.
Here you see actually the 3-month candles from the DXY, where you have the most history of the DXY. We're starting at 86 of 68, and we have here a high, lower high, lower high. We are downtrending on this chart, and you see also when you have the parallel channel of it, you see that it is very nice to see on a logarithmic scale that we have here also the high. We tested it, we go back beneath the equilibrium at the middle of the range, and we also here tested the middle of the range and we go back further downwards. For us, the most important line here is also the red line. it's like 91. When we come there, it would be very yeah, how do you say it, like a horror movie? What we gonna do? Do we gonna break the channel, the lowest support of the channel? If that would happen, yeah, we have a crisis, I think, and we will see what Bitcoin is gonna do. But what you say, we also managed to mention to our clients or community, and it's very nice to see what happens on the 3-month chart also.
Just eyeballing that, Tim, you can also see a major bearish engulfing candle in that last 3 months.
Yeah, indeed. And you have also here, when we dig deeper, you have here like a disbalance in the chart.
Yeah.
And it bearish retest actually. And we go deeper. Now we are also on a bearish engulfing. It's very bearish if you look to the 3-month chart on the DXY. Yeah.
Understanding what's going to drive that as well lower. Take a look across the global landscape. We have really the story of a global de-dollarization occurring at the moment. We have the BRICS nations that are bringing out their own rival currency. We have a number of countries now looking to settle trade in Chinese yuan. So there's slowly and surely this global de-dollarization appears to be unfolding. And that's really also what's driving the dollar lower. So that's not going to happen overnight as well. It's going to be
no decades. It's
slow process. And if you pair that with the fact that the Federal Reserve may have to cut rates going into a recession, as well as a global de-dollarization, then it would make sense that the US dollar index would obviously decrease in value, which would be supportive of risk assets.
Yeah, and how do you think the BRICS topic, how do you think it will play out in your scenario? Do you have a scenario in thought?
It's hard to kind of put a scenario because there's going to be a currency at some point.
Very difficult, huh?
Yeah. Going to come out to rival the US dollar. However, no one knows what that currency will be. Will it be a
CBDC,
a commodity-backed cryptocurrency? Who knows? So it's really up for debate. So yeah, it's hard to kind of factor that into your decision making, but just being aware of that story. There are a lot of other nations that are applying now to go into the BRICS alliance. I believe Saudi Arabia is obviously a big one, which will be a big loss for the dollar as they move away from the petrodollar. So just being aware of it happening and how it's unfolding and how that's going to impact the US dollar index is obviously important to know.
Yeah, okay, thanks. Another question. How do you think investors can profit from the Bitcoin cycles? When you must say you have a strategy on the Bitcoin cycle, how do you will provide it on your customers, or how do you declare it, how you can scale in, how you can scale out, that kind of stuff? How do you use the Bitcoin cycle in your investment strategy?
I think the days of holding long term in the cryptocurrency market are really over. You need to be active, rotating into and out of cryptocurrencies to ensure you're securing profit and also enter the market at the right time. So I would essentially be looking to, if I can share my screen again.
Yeah, I will share it.
Great. Simply put, look to accumulate at the lower end of the cryptocurrency channel on Bitcoin. But you can also use the fear and greed index as a contrarian investor. Retail investors really start accumulating Bitcoin at the top of the bull market. That's generally when they start hearing that cryptocurrencies are doing well. It's back in the mainstream narrative. They hear that Bitcoin is going to go to, $1 million. So they start investing in the cryptocurrency market. However, that's really when you should be looking to trim down exposure and secure some profits. When you want to be looking to accumulate Bitcoin is when there's extreme fear in the market. So during the deep red is when there's extreme fear. No one wants to be buying Bitcoin at these lows. as an investor,
we want.
Yeah, I will be. And as an investor, you should be, because that's really when the contrarian investor begins to be successful in the market. Now, a bull market can last between 2 to 3 years. So if you're accumulating Bitcoin during the lower end of the bear market, during the lower end of that channel, you'll be looking to hold and accumulate for 2 to 3 years. Okay. So, it depends on what your strategy is, whether you're a trader or an investor, more of like a mid to long-term investor. If you're a mid to long-term investor, you want to be accumulating during the bear market lows when there's extreme fear in the market, and you want to be reducing exposure during extreme greed in the market during the Bitcoin tops. There's always going to be another cycle. You can obviously rotate into some altcoins because altcoin season follows Bitcoin. Okay, so there's other opportunities in the market. Maybe you can learn to short the market as well, or just rotate into USDT stablecoin and wait for the next cycle down and repeat that cycle as well going forward. So these cycles are going to continue going. They may become less aggressive during the next bear market or the next bull market. But yeah, accumulate during the lows in extreme fear and trim down during extreme greed. That's the number one.
Actually, it's quite straightforward or quite simple. You look on the weekly chart of Bitcoin. You look also to the RSI of the weekly chart, and you combine it actually with this chart of fear and greed.
Correct.
When it combines, when you have confluence, you get money in the system. When it conflues, when it is green and the RSI is high, you scale out, I think. And that's very nice to see. It's like more an investing way. It's not like trading, but often investing in Bitcoin for the longer term is more profitable than trading in Bitcoin. And in this way, you have also a good average price on your investments of your portfolio.
I think so.
Nice.
And, unless you're a professional trader, generally a lot of traders tend to lose leverage trading in the market. So accumulating,
absolutely.
Investing Bitcoin is really a safer way to guarantee long-term wealth during the bear market lows. But I like to trade. Currently, that 30K area on Bitcoin is a major negative trendline resistance. So I was expecting a pullback from this level. Anyway, I've posted about this on my LinkedIn as well. So I'm now expecting Bitcoin hopefully move down to that 25K area. I'll be looking to accumulate some more BTC around that zone. And as soon as we get above that 30K resistance, which is a negative trendline resistance, hopefully that's the new phase to move higher. So what I will say as well is at this 30K area, over the last 5 weeks, we've seen 5 consecutive weeks of institutional outflows from the Bitcoin market.
Yeah. Also.
So this kind of crucial resistance level, I guess institutional investors are actually trimming down exposure to the market. So they're expecting a small pullback in the market. And I guess the green light for me, or a good indication that we're moving higher, is when inflows start to increase in value again, rather than there's outflows coming into the market. So as soon as you start to see some more inflows going into Bitcoin, that's also a very positive sign for the market at the institutional level.
Okay. Do you look also to the inflow of stable coins?
Not necessarily stable coins. I look at other altcoins. So over the last couple of weeks, Litecoin has had a lot of institutional
yeah, indeed.
That's because of the halving event that's coming up as well. So I guess investors are now prepared for the halving event in Litecoin. Another coin that I personally like the look of for a long-term hold is Arbitrum. There's been some hefty activity on the Arbitrum network.
A lot.
They contributed to roughly 50% of Ethereum's fees over the last week. So there's a lot of network activity happening on the Arbitrum as well. So Arbitrum is one to watch for me. And
what also important is to watch when you have events like that, like with Litecoin, the halving event, you have also a rotation of the money flow. People gonna take profits and will place it in more risk-off assets like Ethereum and Bitcoin, and more less risk assets. I think when they take profit in Litecoin, when it goes well and it goes sky high, we would say, they're gonna take profit and will put it in Bitcoin or Ethereum. I think also it's like Pepe is the perfect example, or Dogecoin. When you have these movers in the market, you can expect an altcoin rally, because all the money that flows in the meme coins will go to altcoins when they take profits. And I think that's also important to watch, where the money flows goes. And what you also mentioned is like, the institutional investors, the big whales, they playing with the charts, with the prices. It's important to watch. Yeah.
As an investor, understanding liquidity and where it's flowing is really going to give you an indication as to where the money's going. The overall market isn't just, think of it as one, it's a one being, really. Money's flowing into and out of certain assets, and it's a herd mentality. So people follow the money. So where money goes, that's where you should also be looking to flow at the same time.
Okay. Another question: how do you look to new liquidity in the market when there comes new money in the market? Have you a specific chart or tool to watch to, like new addresses or something? Where do you look to?
Actually, to monitor institutional inflows, I use CoinShares website.
Yeah, okay.
So, it's not like a live feed of money going into the market, but it gives you an indication on a weekly basis as to whether there's been positive or negative inflows into the market. So that keeps me up to date. Obviously, I use a number of volume indicators on TradingView, but again, it really depends on whether I'm trading leverage futures in the short term, or on the 15-minute or hourly time frame, or whether I'm just accumulating an investment decision for the longer term as well. So yeah, it depends on the strategy and what I'm looking to trade, or whether I'm looking to invest long term.
Okay. Do you have other coins where you look at for the moment, except Litecoin and Arbitrum?
One
for
that's
the
been
future, when we would say within 2 years, what's for you the best 3 top coins, altcoins to invest in?
Yeah, big question there. I don't want to make any kind of bold predictions.
No, they know it. Yeah.
Coming from a Bitcoin mining company, I am a Bitcoin maxi, so
okay.
I understand that there's more there's potential higher return on investment in the altcoin market than there is on Bitcoin, just because of where Bitcoin is in the cycle. So one coin that I'm looking at the moment, just purely due to the central bank digital currency play, is XRP. And due to their lawsuit as well. So if XRP does get integrated into a number of central bank digital currencies, then that's a no-brainer for me for a long-term hold. Obviously, you have Sol,
Matic, also,
yeah. You have DOT. So Arbitrum is one for me now as well. I've been an investor in PAXG Gold because I've been quite hot on the gold market over the past year.
Okay.
So I'm looking. I have trimmed down some exposure to PAXG as gold hit the record high, but that's been a good earner for me over the past year as well.
And Cosmos, what do you think thereof?
Yeah. Cosmos is in my portfolio as well.
Okay.
I have some exposure there, but my top exposure is Bitcoin, Ethereum, XRP, PAXG Gold, Arbitrum, Matic, and Cosmos.
Yeah, we have actually the same portfolio, I think. You spoke also about PAXG. What do you think of the gold market in the coming months? Do you think we're gonna set a new all-time high or not?
So we've just hit a new all-time high. And I was writing about this for the past year, that gold was looking very bullish, purely to do with central banks that have been stockpiling gold. There's a new report that came out showing that central banks, although gold was decreasing in value and they were raising interest rates, central banks have actually been stockpiling gold over the past couple of years. We've also got the possibility of decreasing interest rates going into 2024. So for me, at the moment, short term, I'm expecting there to be some pullback on PAXG Gold, but for gold to really continue to new all-time highs going into 2024.
Okay, thanks. I think that's a lot what we covered. Last question before we end the episode. What are the main risks and opportunities for Bitcoins for investors in the coming months, years? Do you have an idea what the main risk and opportunities are? What do you think? What will be the narrative in the crypto space globally?
So I think that short term, a risk is central banks keeping interest rates elevated for a longer duration. Here in the UK, we just hit inflation, hit 10% again, I believe. 8.7%. It came in well above expectations. So if inflation stays persistent in certain locations, or if it begins to rise again in the US, the central banks are going to have to step into the market and continue raising interest rates, which will be negative for cryptocurrencies. It'll be negative for risk assets in general. So that's a major risk factor there as well. There's also this kind of chokehold happening on the cryptocurrency market with a crackdown in the US by the regulators.
Yeah.
But we're seeing that also in Europe and in the UK. A lot of these banks and institutions are making it difficult for retail investors to access the cryptocurrency market. And I think that it's no coincidence that this is happening at the same time that central bank digital currencies.
Yeah, indeed. I would mention that.
Yeah, we're seeing the development of central bank digital currencies. We're seeing a chokehold in the cryptocurrency market. They're making it very difficult for us to access the cryptocurrency market at the same time. So your CBDCs are potentially a risk there. We're not too sure how it's going to unfold. They can obviously track, they can program the CBDCs so you can only purchase certain assets. So that's a very big risk there as well. So yeah, they're my two major risks at the moment that we're looking at in the cryptocurrency market.
Okay. Do you think the regulation will be better when CBDCs are deployed?
It's a difficult one because, say we take the UK, for example, the government is saying that they want the UK to be a cryptocurrency hub. They want it to be this area where there's a lot of innovation and investment. So there, the government is saying one thing, but the central bank and the actual banks in the UK are making it very difficult for customers and companies to access funding go into the cryptocurrency market. So it's kind of like two sides of the coin here. We're seeing the government saying one thing, and then the banks and the regulators making it very difficult for the cryptocurrency market. So yeah, very, very difficult there on that front. In terms of regulation, for large investment to come into the market, we do need regulation in the cryptocurrency market. So regulation isn't a bad thing. It can be a positive thing, especially for institutional money flowing into the market. So yeah, regulation, I think just having some framework and having some guidelines will be positive for the market.
Yeah, also for new liquidity and new money in the market, and to get the insurance they need and that kind of stuff.
Correct.
It is important, yeah. And also to protect the customer.
Correct. It takes it from, a game in the cryptocurrency market to more of a serious investment vehicle, which obviously we understand it is.
Yeah. Okay. Thanks for your cover of the market. It was very interesting, Anthony. I would thank you. I will thank you. And I hope the people enjoyed our conversation, and I hope also it will help in the future for them, for their investments. And in the coming months, we're gonna work together to get more insights and to help economy, maybe with a fund here in Belgium. We will see. We are spoke about that, but we are very enthusiastic to work with you guys. Yeah.
Great. Yeah, thanks for having me, Tim. Looking forward to building this relationship, and hopefully the next time I come on the show, hopefully Bitcoin's trading at record highs. So
yeah, indeed. Yeah. We're gonna cover a new one in the next weeks, next month. We will see. But it is very nice to have you here in the call to get an extra insight from another analyst like you. And yeah, we will see what the future brings. It's very nice. Thank you.
Great. Cheers, Tim. Take care.
Bye.